Good afternoon, everyone. This is Trader Tim from eMiniMind.com. Today is January 8th, 2018. This is the first market analysis video for the year for us. And what a year it's been. We are 8 days into the new year, and the market has broken out of its sideways consolidation at the negative 23% target from 2607s that long, had a target at 2682s. We moved sideways pretty much through, Christmas, New Year's time. And as soon as we opened up in 2018, boom, we were back again off to the races. So at this point, I really don't have any more targets above us in terms of we had the negative 23, and then we had the negative 61.8 that we did pause at just for, one day. If we draw up another retracement, well, we haven't pulled back into the next 50%. We still have this trend line below us that is extending all the way back to August. And so I'm going to leave that up because it's very likely that, anytime we go straight up like this, what do? We move sideways after that, kind of drift towards the trend line here. And so as we make this another move straight up, does 2800s act as the stopping point? Who knows? 2750s maybe? 2775s, those are three big round numbers, especially 2750s as it is fairly close above us. You'll notice that when we go straight up like this, we do not break the previous day's low. So that's something I would look for. If we have a candle that breaks the previous day's low, that would essentially end this straight up trend. Same with back here. We go 1, 2, 3, 4, 5, 6 days of straight up. And then we have a day where we break the previous candle's low, and that kind of sets us into, we're not going straight up anymore. We start moving sideways. And so that's something I'll look at. Also, we'll be kind of paying attention to how we're acting intraday. If we break into highs and there's an immediate acceleration, if there's buyers at highs that are pushing the market up continually, that's a very strong sign. Today, we zoom in, we saw that kind of price action. The overnight, or the previous day, yesterday's high, Friday's high here, marked with my cursor, as soon as we broke that high, it was accelerated buying. And so it's telling me that there are a lot of buyers that still want to get long at these prices. If we break today's trading hours only high, 27.4850s, and we just kind of move into a new high. We go 48.75s and then tick back down to 48.50s. We tick back up a couple of ticks, 49s, and then tick back down. And then we just kind of sell off a little bit, 27.48s, 47.50s. If there's not really an acceleration into the new high price, then that's saying, or that's telling me that there's really not that many buyers up here, and a short sell-off could start accelerating quickly as we have stop orders get hit, profit taking occurring at highs, and then daily swing lows being taken out. Now all of a sudden you start to accelerate and you get these bigger body candles to the downside, bigger trend days to the downside. One thing I want to talk about today on the 15-minute chart, right as we opened up, we formed a range of about 5 points. And then for the next 5 bars or so, we stayed within that first 15-minute range. And one thing I've found in the last couple of months is that the market is sometimes a little bit slow to get going. And that first hour, we can, either form a consolidation period or just a slow range-bound period. And then an hour into the day, hour and a half into the day, things really start to get moving. And that's kind of noted by the first 15-minute range, or if you want to call it the first 30-minute range. Today's 30-minute range just happened to be the same as the first 15-minute range. But you'll notice once we broke out of that first 15-minute range by one tick, that was enough to give us a pullback and sort of start this upward trend, upward Fibonacci retracements where we pulled back to the 50, we traded in about a point, and then we made it to the negative 23% target. Then the next long from that entry up to the negative 23, pulled back right to the 50%, and that happened to be the one that took us into the new highs for the day, extending a pretty nice move into the lunchtime session, early afternoon if you're on the East Coast. So with that in mind, it's helping me stay a little bit more patient at the beginning of the day. And I'm always using the first 15 minutes as a no trade zone. I like to let things shake out right at the open so that sometimes we get a trend change right away. And like today, sort of, we had this V reversal. And so staying out of this first 15 minutes can be really helpful to prevent just starting the day off on a bad foot. There's always going to be tomorrow. There's always going to be more trades that present themselves. So setting some parameters for limiting, your limiting the high risk trades. We want to be entering on low risk opportunities and trades that have a lot of trending potential so that we can get in once and then ideally trail our stop throughout the trade, because every time you put on a new trade, you now have a full stop at risk. And so by getting in, getting out, getting in, get out, getting in, get out, all throughout the day, you're constantly putting on new risk. So I found it's more beneficial to get into a trade and try and stay in that trade as long as possible. And obviously with trading one contract can be a little bit more challenging, but as soon as you get to multiple contracts, there's some different doors and opportunities that open up that can help both calm the mental and psychological part of managing a trade, as well as making it more profitable and have a bigger impact on the bottom line. So tomorrow is Tuesday. We'll be doing a live trading session as we do every Tuesday. You can check that out at emoneymind.com/VIP. I hope everyone has a great start to the new year, and we'll talk to you in the morning.